Hello guys, so today we are going to be doing a top-down analysis on BTCUSD. So this is my trade checklist. I already outlined everything we are going to be looking for. So join me as we dive into the chart. So the first thing we want to do is to go to the higher time frame to identify what price is doing. So we are going to the weekly time frame. The weekly time frame. What we want to do is to understand where price is coming from and where it's going next, where price is reacting from. As you can see, price has been selling for a very long time. Created that high, it created that high, created the next low. So swing high, swing low, swing high, swing low. So market at swing low. So market has been bearish for a long time. Then again, another thing to note, price is reacting from a level. So what you want to do is to mark out that level. Price is reacting from a level which we call order block. This is the level that price is reacting. So you mark it out. After marking your level out, now you already know where price is coming from. Price has been selling for a long time. Then price just gets to a key level, which is this order blocks or demand zone. So price is reacting from there. And another thing to notice, price swept liquidity before creating that order block. So that shows that this is a strong demand zone because price has already swept liquidity. So we have our liquidity sweep. Then another thing to note, after the liquidity sweep, after the liquidity sweep, price created impulsive move, then a valid pullback. This is a pullback. This is a valid pullback that price created. So that is going to be our inducement. So that we act as our inducement, valid pullback. Where price is reacting from. The next question is where price is going to next. So what we are going to do here is to mark out our draw on liquidity. So we are going to map out the previous high, because that's where the price is going to. That is where you are going to set your take profit. So the first high will be in this level. Mark out this high. Start this high. Then the next high will be the second draw liquidity, which is this level. Then after that level, the overall draw liquidity will be this high on the weekly time frame. But we don't know where price will get there, so I'm just marking it out for reference. So that's it on the weekly time frame. Now we go down to the daily time frame. So on the daily time frame, we have this engineer liquidity. This level is engineer liquidity on the weekly time frame. So price already taking out the engineer liquidity. Price already swept it. Engineer liquidity. Now the next thing to do is to look for a sweep on the daily time frame, which we already have this nice sweep. Price already swept this level. Price give this level a very good sweep. So after the sweep, price create this other block. So you map it out. That is our OB, order block or demand zone. So the next thing you want to do is to identify the liquidity, what will attract price to come to your zone. So you have this sweep, impulse move, then pullback. After this pullback, price breaks structure to the upside. It's a valid break of structure because it's a full body close. So it's a valid pullback. So that is going to be our inducement, which is liquidity. To map it out, that is going to be our inducement that will attract price to come back to our zone. Inducements. So now we go to the 4 hours time frame. So this is the 4-hour time frame. As you can see, it's a valid pullback, like I said. So after the sweep on the daily time frame, price creates impulsive move. After the impulse pullback, then the next swing was a break of structure. Break of structure, pull, then like that. So after marking all that, what we want to do is to refine the candlestick. So you can also refine the candlestick, to the last candle. But another thing, if you refine the candlestick too much, you might miss out when price gets to that level. Price might not get to your entry. So I'll just leave it like this. But if you refine it, you have a bigger risk to reward. So this is it on the 4 hours time frame. So all I have to do is to refine. So I'm going to refine the candlestick. I'm going to use this last bullish candle close to that FVG. So after refining to the 4 hours candle, we have our setup on the 4 hours time frame. So this is a bullish trend. We are looking for a long. Since price is reacting from a zone, we are going on a long. So what we'll be looking for is buy. So the next thing to do is to wait for price to come into our level. We don't know how long it will take, but price will definitely come to our level. So we are expecting price to come to our level. Once price gets into our level, the price will start reacting. Price will start reacting. And once price, then the price will buy. Then we target the high. So price we buy from there. So now we identify our targets. So since we are looking for a buy, our target will be the high on the 4 hours time frame. You can target the high, or depending on your risk RR, risk to reward. This is a long-term trade, a long-term buy. So I'm targeting the 4 hours high. So map it out. So that is going to be our draw on liquidity. So all you have to do now is to wait for price to get into your level. To wait for price to come into your level. To wait for price to get into your level. So you can put your long position tool. So put your long position tool. So that's the long position tool. You target the high, then you take your stop loss below the key level. So now we have our top-down analysis. Thanks for watching. If you want more educative content like this, like and subscribe so that I can drop more for you guys to learn from. Thank you.